Good evening, all. Sunday night, ShogunTrading.com. Shea Horowitz. This is our free weekly newsletter. I'm looking at S&P 500 on a 60-minute basis, and something fundamentally changed last week, and I have to show it to you. On Friday, this is something I've been talking about for quite a while, and if you review back our newsletters, you'll see that I've been talking about it for quite a while. There has to be a change of attitude in the administration in order for the market to go up. And last Friday, we saw a significant change in the way CNBC was talking about the new administration. They went from these guys are not doing their job, these guys are late on everything, these guys are not showing confidence. CNBC started talking the new administration up. They started talking about Geithner, about how wonderful it is, how he's going to save us, about Bernanke, how wonderful he's going to save us. And then Geithner came out and showed some confidence, and then Bernanke came out and showed some confidence, and Bernanke said, yes, the recession will be over very soon. No worries, the recession will be over very soon. The biggest change I saw was in Obama. Obama came out and he says, we're a great country. We have a great economy, and we'll recover from this, and we'll come out of this, and everything will be okay. And that is the fundamental change that the market really needed to see in order for it to go up. Now, that scared the shorts. That really scared the short sellers, and they covered. And they covered all week last week. Now, there's a difference between buying and short covering. Buying usually takes a little bit more sense, takes a little bit more of logic. If you look at companies like C, for example, Citibank was below $1. Why? Because they were about to be nationalized, they were insolvent, and all those things. And then all of a sudden, Citibank comes out and says, you know what? We actually might make a little bit of money in the first quarter of 2009. And that's before markdowns, of course, which is, doesn't make any sense. And after getting $40 billion from the government, from our tax dollars. And the stock goes from 0.96 all the way to $1.89. Wow, the company doubled. The price of the stock doubled within a week just because of that announcement. That does not make any sense. Basically, the people that were short selling C covered. They were saying, whoa, maybe they're not going to nationalize it. Maybe they're going to come out. They're going to fight. They're actually going to show some backbone, and that's when the short sellers covered. Why do I think it's short covering and not buyers? The reason why is because the intraday action, the action that when we're day trading, was very interesting. Let me see how many days I can do. Oh, this is a perfect example of what I'm talking about. Stocks were gapping up. Pulling back. V bottom, whoop, just a drift up, gap up, pull back, V bottom. See the V bottom, and then whoop. People were just covering as soon as the stock showed any kind of strength. They started covering. They were trying to beat it up again. They were trying to short again, and then as soon as you showed any kind of strength, they were buying and buying. That's what created these kind of drifts. I'll show you the same thing on S&P 500. Basically the same thing. Stocks opened down and then up, and then they came down, V bottom, and drift up. Came down, V bottom, and drift up. I don't care for these drift ups, and drift ups are a result of people buying without thinking. It's people buy when they think and they buy. They look for waves. They look for bottoms. They look for opportunities to buy at cheaper prices. When people buy without any kind of care, that's when you get a drift. They're just buying, and that's basically the short sellers covering. So what does that put us as far as the S&P 500 is concerned? We came back. This is a breakdown valley. This is our low. 50% was right over here. And by the way, we tagged it and then came back down, and then we flew right past it. This is the 62 line, and which is at 750. We came all the way up to 758. Right now we're making a double top. There's one top and two top, and I personally think we're going to pull back. Whenever we pull back and we show a higher bottom, that's what I'll be looking for. That's what I'll be looking to go long and really get on it. I don't think that a simple bounce like that, works. GE, for example, had their ratings cut, and they went they went all the way up on a rating cut, on a credit rating cut. It doesn't make any sense. I have to give a lot of credit this week to Jon Stewart. Jon Stewart roasted Jim Cramer. And basically, he exposed Jim Cramer and the CNBC crowd as not necessarily financial news, but financial hype. And they missed the downturn, and now they missed they're using their hype to drive the market up. You can actually watch CNBC and you can see the changes of their attitude and what they're saying based on what they're trying to do. It's not completely unbiased financial news, which sucks, of course. Now, a couple comments before I keep going. Mark to market. Mark to market is basically if all the houses in your neighborhood are selling for $300,000 and you think that your house is worth $500,000. You have to do a financial statement. You have to consider your house, the value of your house, the same as the rest of the market, the same as the rest of the houses around you. And without the mark to market, you can name whatever value you want. So their idea right now is to suspend mark to market for a little while, depending on what they were trying to accomplish. So basically, you can name your value, whatever value you want. Yeah, of course, that will increase the likelihood of banks doing well because they won't have to mark down their assets to current market values. Yes, some markets have very illiquid markets or no markets at all, but the value is the value and so on. I don't think that's a good solution. Changing accounting rules is not a good solution for recovery. The other one is the uptick rule. The uptick rule is the most ridiculous idea in the world. First of all, when we had decimalization, when we had fractions, yes, uptick rule worked really well. Even though the NDX, the Nasdaq 100, took an 80% dive back in the right here. This was done with the uptick rule intact. The uptick rule was on. This 80% dive was with uptick rule. Earlier this year, 2008, they removed our ability to short the financial stocks. And guess what? Financial stocks took a monster dive even without us being able to short them at all. They're trying to control the market by these kind of maneuvers where we're just going to eliminate the selling. You can no longer sell. It doesn't work. The market will go where the market needs to go. By the way, now with decimalization, where the spread is 1 penny or even a fraction of a penny, the uptick rule has nothing to do with it. Basically, it's all hype. And it's all politicians posturing. It's not going to do anything. The only thing that's making the market go up, in my opinion, is the change of attitude. It's Bernanke changing his attitude, Geithner changing his attitude, and Obama, more importantly, he stopped talking down the economy. If you listen to the back newsletters, you'll see that's exactly what I'm talking about. Is that Obama needs to stop talking down the economy. He needs to stop saying this is the worst economic situation since the Great Depression. I don't care if it's a truth or not. You can't keep saying it. You can't keep telling someone you are overweight, you're overweight, or you're overweight, you're overweight. You are going to depress them. You need to help them, motivate them to get out of their weight issue. And that's exactly what the market needed. The market needed to be helped to get out of its depression, mental depression or emotional depression. And that's what the change of the attitude did. Where would we go from here? I think we make a higher bottom, and I think we come back up. That's my opinion, based on the change of attitude. Don't forget that Tuesday and Wednesday we have FOMC. Wednesday, 2:15 interest rate decision. I doubt they're gonna move it, of course. Anyway, things are looking up. I hope that this is a sign of things to come. I hope this is a sign of people coming back into the market. I don't believe people are going to stay on the sidelines. I think people are looking for the buying opportunity, and so am I. Have a great week, and I'll talk to you next weekend. Take care.